Well, ladies and gents, welcome back, guys. Hopefully, everybody out there is keeping well, and I hope you guys like this new format in this video. Now, 2022, I feel responsible to give you guys the dirty side of trading and the stock market. Explain to you guys what goes on in the background, because some things that might be common to me and I understand very well might not be common to majority of people, and it's probably not in my best interest and not in traders' best interest that watch this video for me to say what I'm about to tell you here. But given the fact that we live in a world where manipulation is normal, it's good to be a part of it. You don't have to be a part of it, but at least understand it so you don't fall on the other side of the knife and then be a victim to manipulation. Let's cover some points. Here's what we're going to cover. We're going to cover pump and dumps, social media trading, upgrades and downgrades, hedge fund manipulation. Let's start with the first one. Guys, pump and dumps happens every day in the stock market, and it happens specifically with low float stocks. And it happens with penny stocks, low cap. It happens in the crypto world, cryptocurrency. And it also happens in NFTs, which is a new thing, right? So what is a pump and dump? Let me give you an example of a pump and dump, guys. Let's go over here and pick a low float stock. Here is an example of a pump and dump. Now, from a penny stock trader point of view, this is beautiful. All right, this is what we require day after day, is a pump in a stock, 1,000% in the space of 10 days, right? 10 days, 1,000%. Now, obviously, nobody's crazy enough to hold a position over a couple of days because the reality is trading this kind of stock or these kind of stocks, your consistency rate drops immediately because of the manipulation that goes on here. Your reward increases, your risk increases, but your consistency rate decreases. So what do I mean by that? If you bring 1,000 traders and tell them to trade just penny stocks or pump and dumps, which is what happens with penny stocks, not a single penny stock, right, that gained over news, whether it's FDA approval, drug approvals or partnership, that didn't come down crashing. You look at all the penny stocks out there, they will come back crashing, right? So from a day trader's point of view, this is what we need to be able to be profitable. So for you guys, obviously you're going to lean towards this because of the reward. But what if I tell you, because of the reward, you can be making money, but your consistency will drop? So you actually need experience to be able to profit from such trades. If we bring 1,000 traders and tell them to trade just this sector, penny stocks or small cap stocks, 5% of that 1,000 will get to be profitable. In comparison, if we compare it to somebody that trades blue chip and we bring that same 1,000 people and tell them to trade blue chip stocks, well-established stocks that don't have much volatility, don't have much reward, but the risk is minimized, but the chances of you being consistent increases. Out of that 1,000, you will probably have 10, 15% that get to be profitable. And, half of those 10% don't even have a year's experience. So it's so easy to be consistent trading blue chip stocks than it is to trade pump and dumps. So here is the dirty side. The dirty side is, well, these stocks are manipulated by chat rooms. We don't do any of that on my chat room. And they're manipulated by social media. I mean, you go to websites like StockTwits or Reddit, you will see a lot of people hyping up. Now, that doesn't mean that the hype won't play out correctly. No, matter of fact, it will, right? You will have a stock getting pumped, but you get you come late to the trade, or you come in with a small account, you over leverage. The volatility you will notice on the day, okay, it's no stop loss will work for you. So what ends up happening is you either don't use a stop loss and take a big loss, and wait for a recovery to go in that specific direction, or don't risk it. Because here you can view it as gambling. You win big, but you lose big. And these manipulations happen on forums, stock tweets, Reddit, Twitter accounts. And it's great. It's great for people who are trying to make money, and this influencer who's influencing such behavior. But in the bigger picture, you will get caught out, because if you constantly do this, the rug will be pulled. Somebody's going to pull the rug from under you, and you're going to lose big. So that's, something common here. And this is literally, guys, what you're going to see in a pump and dump stock. I mean, I've made a lot of money on this trade, LGVN, long position, not a short position. But that's just because the stars aligned, and I was there. There was a short squeeze. The float was low. But for somebody that comes in seeing this, obviously you get caught out. Now let's move on to the next one, social media trading, which we just covered. It's in the best interest of social media traders to promote something that they're holding, right? Either they're holding, or, they get paid by brokers to ensure you lose, or bring traders to lose on that trade. Because look, you bring 1,000 people, trade this, like I said, 90% will lose. Right? 90%, 95% will lose. Only 5% will make money. And that 5%, you will get to see their rewards. So social media trading, you have to be smart here, guys. You learn from people, but you never, ever follow them into battle. It is a selfish skill. We all trade against each other. Your mentor trades against you, but you can always make money trading against the other person, because the stock doesn't just go up, it goes down as well. So if I'm long, you're short, I make my money, you make your money at the same time. But when it comes to these social media trades, they're very risky. I can come out and tell you, hey, this stock is going to the moon. Next day, or this crypto is going to the moon. Next day, that crypto's up by 10%, 20%. The reason is, well, I just promoted it on social media, and everybody else thought, okay, let me buy that stock. That's not trading. This is not how we trade, guys. You might want to follow the crowd, but only for a short period of time. You want to get out before everybody else. You want to get in with everybody else, but get out before everybody else. That's how we use it to our advantage. So that's another thing you got to be careful of. Now we have this new sector with NFTs. I see a lot of people just throwing their money at everything, in the trash, basically. 90%, 95% of these NFTs will crash eventually, and you'll lose your money. Nobody wants to buy that piece of art you bought that you thought had value, right? It's great if you want to support an artist or somebody else, but long term, you're not going to make anything out of it. And I can almost promise you this, and I'm not being close-minded here. I just know this industry can be ruthless sometimes, and it's great for the artist. But there's opportunities that are coming out now, but not for you, as I said before. Now, here is something that is not retail. This is now, we're talking hedge funds, upgrades and downgrades. Have you ever seen, and by the way, let me just finish without my point on social media trading. This person, ARK Invest, Kathy Woods. Now, a lot of people praise her. A lot of people praise this person for being a great investor. This person isn't a great investor. This person is a great marketer. Why do you think every time a hedge fund invests in something, they make it public? Because if they want to make money, they need the retail traders to buy that same stock they just bought, so it increases in value. This is the same person who bought this stock, okay, at the peak last year. In 2020, I believe, she went in, bought it somewhere around here. Now look at this, 60% loss. Now recently, right? Recently, she sold all of it. Right? She sold all of her 150 million worth of Piton stock. Now that's not to take a jab at that fund or anything. But that's just the way it goes. PR is spread everywhere, not because they give a shit about you. Who are you, right? They're just there to make money. Sure, you would have made some money if you got in once she announced it. But notice how she didn't announce that she sold, or that hedge fund didn't announce that they sold. They only announced it after, right? Why? Well, you tell me why. Well, nobody's going to tell you, hey, we're going to sell that stock ahead of time. But you guys are here praising everybody. Now, downgrades and upgrades. That was the next one. What are stock upgrades and downgrades? Well, that's when an analyst on Wall Street comes out and says, hey, we're upgrading this stock to $30, $40. When GME was at $200, an analyst came out and upgraded it to $300. How much of a fool can you be? To just put out, why would an analyst upgrade a stock? Because funds, banks, the people they work for, tell them to research and place up, your rating on that stock. Why? Well, because if you place the rating and you make it public to the average investor, you say, well, it is great. This is why you should never trust anybody, hedge funds or not. Do your own research. If you want a stock, you look at a stock and say, well, is there going to be sales? Will the sales be great? Will the demand be great? Will the profits be great? And you can easily do that by just looking at future projections. I mean, if you look at the category or the sector that stock is in, if it's tech, if it's consumer staple, you just say to yourself, well, in the Christmas period, a lot of people bought presents. Apple would have sold a lot of phones, iPads, blah, blah, blah. So surely this is going to be a stock worth investing in because it's going to be worth more when the earnings report comes out and they've beat estimates. So upgrades and downgrades, I don't trust them. For an average beginner, they trust in upgrades and downgrades a lot, but personally, I don't. Hedge fund manipulation, as I said before, guys, when hedge funds buy stocks, they announce it to the public. Case in point, this fund specifically, they announce it to the public, and obviously they have to announce it to their investors, but you don't go on putting it into PR and sending it across the world everywhere because you're kind-hearted. No, you do it because you want somebody to buy your stock and pump it immediately so you can make money for your investors. So these are 4 dirty tricks in the stock market world. I hope this video helped you beginners out there. I understand how to take advantage of these, and you need to learn how to take advantage of these too. Do not fall, victim. Don't be at the opposite end of the knife. Make sure to eat what you kill, really. Go in with them, but walk away before them. It's just the way it goes, guys. Gotta go. Peace and love. And again, these are my opinions. Not taking jabs at anybody here. These are my opinions. This is how I view things. And this is obviously I might be wrong, but this is the way I look at it, guys. Gotta go. Peace and love. Smashy, smashy. Let me know what you think in the comment section about this new format of the video. Yeah. Peace and love, guys. See you soon.